hot IPOs. Avinash, what's the verdict on Bajaj Housing Finance? I believe the grey market premium is also indicating an 80% premium already on this housing finance company. If one doesn't get an allocation to this in the IPO, do you recommend buying it on listing day, even if there's a 50 to 60% upside? And the reason I ask this is because while the fundamentals are solid, it's still a very expensive stock.
Yeah, I think, good morning, Samina. See, my guess is that this is an issue which is coming from the Bajaj Group after a very long time. And I think the Bajaj Group has rewarded investors quite handsomely. Valuations apart, I think, this company has got a great future. The runway for housing finance in India is extremely large. And I think Bajaj Housing is the second largest housing finance company. And with the kind of funding they get it, I'm quite sure that in the next, say, 2 to 3 years, they should be, doing a very large kind of AUM book and with a very impeccable asset quality. So I think, your question whether one should buy the stock on listing, because obviously this share, this issue will get heavily oversubscribed. Yes, I think if you've got the next 2 to 3 years in mind, this is a stock which has got to be kept in your portfolio. Please don't miss it. But you need to give in that much time, because obviously when you buy a stock at 50-60% premium, obviously you're buying at an elevated level. But I think growth prospects seem to be quite solid. And I would not be surprised that, over the next, say, 12 to 18 months, based on the kind of news flows the company announces, the performances the company delivers, the investors could still make a good amount of money. But I think over the next, say, 2 to 3 years, it's a portfolio stock. One should definitely stay invested.
Okay. Let's talk about the others as well. And we've briefly spoken about it, but Kross, and I want a view from both. But Avinash, I'll start with you first. The CAGR performance, in fact, I was looking at a note from Deven Choksi Research. 44% CAGR for the last 2 years, remarkable ROCs for an auto anch. Is it expensive though, or is it something that you would subscribe to? Avinash, the question is to you.
I think, Neeraj, if you look at the longer term picture, they are into basically suspension trailers, machined components. And I think this is a very, high-end engineering kind of business. So I think despite the fact that the stock may appear a little expensive, if one were to take the next 2 years and see the kind of growth opportunity, then I think clearly, they've done a top line of 620 crores, a bottom line of around 45 crores. And as you said, the CAGR is almost 40-45%. So I think, if they continue to maintain this growth rate, then I think the markets could definitely be rewarded. And I would not be surprised that this issue could get a solid response, considering the fact that this is a very high entry business. It takes a lot of time to become a well-established vendor. So, machining is a very high-end activity. So yes, from a longer term perspective, yes, even from a listing gain point of view, there could be a reasonable listing gain also for this stock.
And Deven, good morning. Lovely note by the way on Kross. I'm just trying to understand. So listing gain notwithstanding, and let's assume that the listing gain happens as Avinash is saying. What about post that? Is this a company that you would keep in your portfolio, or are the other listed auto anchs giving you a better opportunity? Kross, that is.
Yeah, and Neeraj, good morning. Well, I think definitely other auto anchs are there in the portfolios, but the fact remains that I think this company is getting more amount of prominence. 2 or 3 reasons. Government is increasingly spending higher amount of money on the agriculture and agriculture related activities. So obviously, I think the sector in which they are present is largely the tractor, the farm equipment side of the activity, wherein I think the majority of the machine components are going into. So that is one area where we are reasonably sure about, I think, the kind of demand scenario getting generated. In fact, in last 2 years' time, if you see this particular growth, it gets validated that because of the larger emphasis of the government, I think this kind of companies which are up till now sleeping, I think they have started suddenly waking up because of kind of business they started attracting into. And I think given the kind of pedigree for a longer period of time that they are enjoying, I believe that I think the market is ready for the products I think which they are supplying to different OEMs as well. So from that perspective, we remain reasonably confident about the growth, at least if not more for next 3 years. And that's where probably I would like to think that such kind of companies which are relatively missing in the marketplace, I think they would probably find the presence. The off-road vehicle markets, the tractor, the farm equipment markets, they are the ones I think which are niche markets, and there comparatively the margins remain relatively better as compared to, I think, the other peers. So to an extent, I think they should be performing better going forward. And as we have seen the improvements in efficiency, we believe that the margins are likely to remain a little bit on a higher side. Given the lower raw material cost advantage that they are now getting, is also going to be another factor which should be giving sufficiently good clarity for next 2 years on the margin front for this company.